Hi, everybody. This is Hyperwave, and I hope everybody found maybe an American holiday. Actually, probably Tyler knows, but that they did have a nice holiday, eat lots of chocolates, potential roses. I will stop right there. Yeah, really excited about today. The reason we have our title is because everything is pretty much on the cusp. So we're going to look at all those. Our webinars tomorrow, which is really exciting. And Tyler doesn't know what I'm about to say, but I am wearing my PT shirt because yesterday I went hiking in the mountains and my knee didn't hurt. And I hiked like really tall in the mountains in Harper's Ferry. And it was like a 4-hour hike and it was awesome. And there was even snow trekking at the end.
Oh, congratulations. That's fabulous.
Awesome. All right. How's everything with you, Ty?
Everything is great except for the markets, and that's why we wanted to talk about them. Um, we've got a lot of cross currents going. As everyone knows, we bought gold and silver, mainly gold and gold mining shares, a couple of weeks ago. And I didn't have a high degree of confidence in that trade, but we did it nonetheless. And so far, it's actually working out. What's strange is that the US dollar is also strengthening, got over 97 from a low earlier. We'll take a look at some charts. The stock market has been trying to break out to the upside, up again today, and is getting very close to the 2,800 level on the S&P that we've been talking about. So I want to look at some charts on that. The reason these three things, the dollar, gold, and the US stock market, are so important to me is basically they haven't made a lot of headway for the past year, almost 14 months now. And that means they've been all consolidating in bands. And when the band breaks to the upside, things are going to get very good for that asset class. But if they break to the downside, things will deteriorate very quickly. Now, these three particular things, the dollar, the US stock market, and gold, are very important to me because of the Medium article that Leah and I wrote talking about the coming resolution of the debt problem. And I'll explain a little bit more about that as we get into these charts. We'll also take a quick look at Bitcoin, which isn't doing anything, and the other cryptos are all flat also. But, and as I keep saying, I'm sort of disinterested in those markets because I have a high degree of confidence where they're going. We've been trying to keep people out of them for a very long time now. We still are trying to keep people out of them, and I don't see any change in that. But we will take a quick look. But the important part of this vlog today is just to try to put in some perspective why these three markets are so important to me from a macroeconomic point of view. So what I'm going to do is I'm going to do a quick screen share.
Hey, Ty.
Yeah.
One, since you love talking all day, maybe we could talk all the way until the webinar tomorrow because I'll ask some of these really good questions that are coming through in the live chat.
Oh, that'd be great.
And also, so that you don't think that we're offline, I'm going to go off video so that you get full Wi-Fi here.
Great. Okay. What I want to do is I want to pull up. I've been watching Tesla, and I like the way it's acting. I wanted to pull up. Let's just take a look at some miners. First, we'll look at just the GLDs. And this is obviously gold. This is the largest depository outside of central banks of gold in the world. And what we see is on a daily basis, I'm going to switch this over to weekly. And this movement over the last 3 weeks is very interesting to me, because some people remember that Tone's sequential gave a 9 on a weekly basis. And we should have had 1 to 4 weeks of pullback. And we haven't really. We've actually just gone sideways. And on the GLDs, we're playing around right at this 124.30 level. This is actually a breakout. We'll take a look at the XAU in just a second, but this is a breakout to me to the upside. And so when I see a breakout like this, Consensio is fully bullish at this point. We haven't had, well, right here, we had one candle that really closed and opened above the upper Bollinger Band. And that's usually a sign, as did this one, that we would return back down to the middle. We sort of tried to, but didn't go anywhere. And now we're back up in an uptrend. That's a very bullish posture. The weekly Copic curve is going crazy to the upside. And because of that, we decided to buy gold, the GLDs and the GDXs, which is the gold mining. But I just thought we'd quickly go through some charts of mining shares. This is Anglo Gold. Same pattern. Notice that all this activity on a weekly basis is above these highs, all the way back here in January of 2018. These are some of the gold mining shares that I like. This is Kirkland Lake Gold in a huge uptrend. This is Gold Corp that's been in a big downtrend along with the price of gold, but the Copic is very, very strong on a weekly basis. We have not taken out the upper band. Consensio is very positive, and that would be an interesting one for people to consider. This is Newmont. Newmont lives in its own world. It's an enormous company in terms of gold mining, but often runs counter to the other gold mining shares as well as gold, just because of its enormity. And it has some mining problems down in New Guinea and other places with government control of things. But even that has broken back to the upside of the mid-band of Bollinger and has held it very well. I expect to see a run up to the $36 level on that. So what we're seeing is we don't really have uniformity across the gold mining companies, and you rarely do, but all of them are looking pretty good. This is Agnico. This one is El Dorado. Let me just roll this up a little bit. These are the GLDs that we just looked at. This is Alamos. And if you just keep your eyes going down to the bottom chart, the Copic curve, and also the RSI, you'll see just uniform strength basically across all of them. Here's the McEwen Mining, which is weak, has not gotten back to the midpoint. They must have some fundamental things going on. Same thing with IM Gold. So it's clearly not clear across the board. I did want to look at the junior miners. This is the GDXJ, also an ETF like the GDX, but these are the junior miners instead of the big mining companies that we just looked at. And it is, very strong. And from a Consensio point of view, you've got everything going up. You've got the stop and reverse points going up. So gold is looking interesting. And we've had a bit of a back and forth with Tone about this. He didn't think that getting into the miners and getting into gold and silver at this point was warranted. And I agreed with him for about 5 months, 6 months, 7 months. And then all of a sudden we saw some breakouts. So what I want to do is I want to take a quick look at the XAUs themselves right here. This is bullion at $1,315. And if we take this back, we'll see that this area up here at $1,350 is really critical. We're not at that. We're at 1315. We did run up to 1325 a couple of weeks ago, which is where the 9 appeared. And we did get a negative week, but it didn't really go anywhere. And so far, we've got a positive week going right now. Now, very easily, this can turn down and go at least back down to 1252, the mid band of Bollinger, between 1240 and 1250. But anyway, what I'm saying is when something as powerful as a sequential 9 tells you you better get out, but then things don't deteriorate for a couple of weeks afterwards, maybe all we were looking at was a 1 to 4 week pullback before going higher. And if we go very much higher at all, above this 1250 level on the XAUs, this could be off to the races. And my question is, what does that mean? Now, all the way back here in 2016, we were at that same level, up around the 1350. Tone uses the number 1400. I think it's a little lower than that, maybe 1380, 1375, to just keep your eyes on. Okay, then I wanted to also take a look at the inverse of this, which should be the dollar. But something weird has been going on recently, and I'll show you what I mean. If we take a look at currencies, let's take the DXY, which again isn't a perfect index of dollars. It's only made up of basically European currencies, but also the Japanese yen. But and there's a very large portion of euros in it. But let me just flip over to the euro dollar for a second. Here's the euro dollar, looking very weak and must hold this 112 area. As you see here and here, it was resistance and now support, but we're testing it a second time, and this is in a goes back about 4 months. So we've got a double bottom that Tone is very big on, saying that double bottoms don't hold. I agree with that. I think this is a very bad looking chart. There's a very clear head and shoulders on this, and I would argue we've already broken it, which would give us targets much, much lower. So let's just stipulate that the dollar looks strong and the euro looks weak, and the dollar part of that equation is actually moving more with gold than inverse to gold. And that's puzzling, except for the fact that if gold breaks out to the upside here, my next article with Leah talking about the 5 solutions to the debt problem, I think begins to come into play in a big way, meaning that continued strength in the dollar, along with strength in gold, sounds like a pretty good mix for central banks to once again consider a gold standard of some type. It's way, way premature to make that judgment. But if gold were breaking down the way I thought it was going to do before this last move up that we finally bought into, If gold was, approaching 1100, then my thought was it would not hold 1,000, and we could see 800 and even as low as 600 fairly quickly, which would take it out of the running to a certain extent against a potential move of Bitcoin sometime in the future. But that's not happening. And I think if we see gold continue to show strength, we are going to be playing it from my client's point of view, and our consulting clients, we're already in, but we'll take bigger positions if we can get up over that 1375 to 1400 level. But this dollar chart is very interesting to me, because even though the weekly Copic is not looking particularly good, let's take a look quickly at the monthly Copic, and it has turned up off of this bottom. And this is the one you want to follow as the monthly. And you also notice that on a monthly, Consensio is very strong. The stop and reverses are very strong. And now we're coming up to this high that goes back many years. This high in the dollar, which is right around the 101, 102 area in terms of closes, and up about 104, 103 in terms of wicks. We're getting up there again. And these moving averages are beginning to accelerate. So it's too early to make the call, but right now I like the way gold is acting, but I also like the way the dollar's acting. Let's just take this back a little bit further before the last crisis in 06, 07, 08, 09. And you see all of this action is above the action in the dollar back then, all the way back into 2004, 2005. So this is a very important move on a macroeconomic basis. And the fact that the euro at the same time is approaching new lows over the same period, I think is saying something not only about the euro and the European Union and Brexit, but also against the second greatest block of currencies in the world, which is the euro relative to the US dollar. And you see on a monthly basis, the peak, just the opposite of what we saw in the dollar on the monthly in the euro, and now the acceleration down and this acceleration on the Copic curve. So in terms of gold and the dollar, some interesting things are beginning to develop. Let's go to what I think is the biggest story. And hats off to Tone. And I'm very happy that Leah and I also have been talking about this. And we're going to take a look at some indexes in the US. Let's start with the Dow Jones. I say hats off because just think back into the second week of December of this year. Let me go weekly. And remember how pessimistic everybody was down here at the bottom. Everyone, meaning the majority of people on Wall Street, almost all the financial media, most analysts had concluded that we had begun a bear market. And Consensio said we were in a bear market in some of the indexes. Some of the indexes, not quite. And so we held off going full negative, even though we got 100% into cash on the way down. And then decided after this end of the second into the third week of December that a big rally was coming. I didn't think it was going to be this big. I thought what we would do is we would run up. I'll make this a little bit bigger because we're talking about some important stuff here. The first thing that happened is this downtrend from the all-time high on the Dow through these tops was taken out 3 weeks ago. The second thing that happened is that we had this bar break through the middle of the Bollinger Band. This bar was completely above it. And then we've got this unbelievable week that's going on today with prices up 336, and we're at 25,775. Now, the all-time high in terms of closes was right here at 26,769. So we're only 1,000 points away, less than 4% from all-time highs in the Dow. Well, what the heck is going on? How can we switch so quickly? You can see the Copic coming down, bottoming right with the weeklies. Let's take a quick look at the monthlies. Still down. So we're not out of the woods in terms of the monthly Copic. And we're not out of the woods at all in terms of the actual price action. That shows up better on the S&P. So let's pull the S&P up. And then I want to talk about why I think these three things, gold, dollar, and the stock market, are important. The S&P has got a very big zone that we've been talking about for a long time, running from 2,600, which it needed to get above because of these lows in here and these lows over here, and 2,800 because of these highs that are coming in right at 2,800, kind of where this blue line is. So we've been saying there's a range between 2,600 and 2,800 of huge overhead resistance. And as people remember, Tone got a sell on the S&P that should have been a 1 to 4 week pullback, and we've had no pullback. And just as I said on gold, when you get that kind of action and the 1 to 4 week turns out to be less than a week, and then you go higher, that's very, very important. But I need to see us close above 2,800, these highs on the wick right here, before I'm ready to say that we are in a full bullish position now. We've been carrying about 50% long ever since the end of the third week in December because we took inverse funds off. But I did not expect us to have 1, 2, 3, 4, 5, 6, 7, 8 weeks, 2 months of unrelenting upside action that has taken us 80% of the way through all of the resistance. Well, 80% is close, but no cigar. It only counts in horseshoes and nuclear weapons. Doesn't count in the stock market. We need to get up here. The fact that we're above the midline.
Tyler.
Yeah.
Ty, you silly
Yes.
man. Horseshoes and hand grenades, but okay with your nuclear weapons. Keep going.
Well, we live in a nuclear age now, so we might as well be apoplectic.
True.
Okay. So, but I'm very interested. I want to see us hold this today. I want the S&P to get above 2,800. It's been trying for a couple of days. Let's take a look at the NDXs. Same thing. Exactly. Let's take a look at the total NASDAQ composite. Same thing. Exactly. You also are seeing below all of the stop and reverses coming up and beginning to accelerate. Dow Jones Transports, same thing. Russell 2000, same thing. Okay, so to me, something very interesting is going on. We're not going to look at individual stocks today. We're going to be doing a lot of that over the weekend in our webinar from a Hyperwave point of view. But I'm going to go off screen share now. We're not going to look at sectors and industries, but just accept the fact that almost all industries and sectors are also in very strong uptrends. Those that pull back a little bit don't go very far before returning. So I think all of that's very important. I'm going to come off this and go back to this. Okay, so what does all this mean? I have no idea, but I'd love for any sort of input that people can give us. All I know is it's very, very important. And it's important because of this. Just follow this logic for a second. The stock market breaks to the upside. To me, that would mean a 1 or 2 year move. Not a 1 or a 2 month move, but a 1 or a 2 year move. Why? Because we've consolidated for 14 months sideways. And when we've done that in the past on this 10-year bull market, 10-year bull market, we did it in 15 and 16. We did it back in 11 and 12 for a period of time. This is the biggest, longest consolidation with the deepest correction, almost 15% from top to bottom in some of the indexes, as opposed to just 5 to 7%, as much as 10% in some of the previous ones. But if you break out to the upside of that consolidation, that is a significant break of what in hyperwave lingo would be a phase one that's lasted 14 months with tops right around that area that we talked about for almost all the indexes. We hit those tops on 3 different occasions last year. So we've got triple tops, and now we're coming up a 4th time. So I think if we break to the upside, all of a sudden, the world economic picture changes. I'm not saying that we're doing that. I'm saying if we do that, and that's why people have got to be aware of, we could be ending the upswing from December, or we could be starting a brand new upswing above all-time highs. If we're ending the upswing, then we're going to go down and test the bottom that we established in the 2nd week of December, and we'll probably keep on going. And then all the fear about the recession, all the fear about a bear market comes into play. What I'm saying as of this moment today, that it looks like the probabilities have shifted back to the bull side. Now we just have to wait for confirmations. And that's the hardest part of this business, is being patient, not drawing conclusions until the evidence is in. Okay. So what does that mean? The US economy is growing at 3%. There's never been a problem over the last 14 months with the economic strength of the US. There's been fear about inverted yield curves. They never came about. They still could, but they haven't. And you've got 12 to 18 months after they do invert before you really start to worry and see evidence. That has not yet happened. We've had all kinds of problems with trade. Maybe that's being resolved. Too early to call that, but it looks better and better. We've had all kinds of problems with President Trump and the legislature that got even more roiled after the election in November, where the Democrats took over the House. But now we've got a signed border bill that there will be some confusion about, and there will be legislative blowback, and it'll probably go to the courts. But that's behind us as of 20 minutes ago. And all I'm saying is that if the market is sensing that these things will be resolved in some fashion and we can get back to business, corporations and businesses don't care about all this legislative nonsense. What they do care about is unraveling some of the things that Trump has already done in terms of taxes, in terms of all of these new attempts to get corporations to have to do certain things according to certain liberal policies having to do with share buybacks and that sort of thing. We could have clear sailing for a couple of years. And what that would do is that would give the world another year or two to get its act in order in terms of their own economies, and try to get their interest rates up a little bit, and try to get the growth above the 1% level. Try to catch up at least halfway to where the US is. And the US would be able to support that movement if the US isn't in a big decline itself. If we are, then everyone else is going to be also. And that means that in the big macro picture that we're all looking at, that then brings Bitcoin into play, we could be buying ourselves a year or two during which some analysts, such as myself, and Tone, and Ben Zen, and Murad, and Willie Woo, and others, believe this could go on for another year or two with the cryptos and Bitcoin trying to find some sort of a bottom. And that's exciting to me in terms of the big scheme of things. As you know, that's what I want to have happen. I want Bitcoin to be the thing that begins to emerge in such a way, so powerfully and so rapidly, that it is going to be able to catch up with the value of gold at some point, either because gold is coming down or Bitcoin's going up. Because I would prefer to have a Bitcoin standard than a gold standard. And the longer we can put it off, the greater that possibility is. That's why I showed you the gold charts. Because if gold wants to go up, we're going to be there. We've already got our toe in the water. We're going to have our consulting clients and our fiduciary clients in heavily into gold if gold starts breaking out above that $1,380 level. Because to me, even though it's not going to go to 25,000 in a week, it could very easily get to 1,600. Then it could very easily test the highs above 1,750 at 1,900. And then the world will be looking and talking gold again. Right now it's not, because we've had such a long period of consolidation. So what we've got is we've got a horse race going on here, time-wise, in terms of who's going to break out and start to move from our perspective, but more importantly, from the financial world, the media, the rest of the world that doesn't pay close attention to this. What central banks need is cover. Is they want to do the thing that is most acceptable to the most number of people, even if it's in an emergency situation. They weren't afforded that ability back in 07, 08, 09. Everything they did, they had to do. And they had to do it, and the world let them do it because the world recognized how difficult the problem was. So we're talking about the difference between a crisis being forced on the world through some exogenous event. Something happens as it is beginning to again in Southern Europe in terms of currencies and all of the rest of it, in Turkey, in Venezuela, in Argentina. There are things that could happen that could force the hands of those in power. They would prefer to do something in a timely way prior to having to do something, which would probably be default. If they don't have to do it, then they're going to make a choice. And right now, the choice is probably gold. Now, having said that, we're getting closer to actually being able to publish our gold article. It's going to have to wait till after the webinar on Saturday and Sunday. But I did want to bring up one other thing very quickly, because I told you I would, which is the Bitcoin chart. And all I wanted to show you is we're sitting at 35.58. That pop that we saw just about how many days ago was it? A week ago. Didn't turn out to be anything yet. It still could. I don't think it's going to, as I've said. All we're doing is drifting lower. We never even got back to the wick high of that. But it has not yet broken down. So my thoughts, again, as I like to do, is just do a real quick look at where Bitcoin is on a weekly basis. We're looking at the full hyperwave. And by taking a look at the stop and reverse points, see no change from the last time we talked. Taking a look at the Bollinger Bands, well below the mid, and it should have been able to at least test that midline. It might do it just by going sideways. Somewhere out the next 4 or 5 weeks, that midline is coming down fast enough that we will hit it and then drop at that point. Or we could drop quickly, which would take it down below 2,000 to get to the lower line. So no change there from when we talked before. Let's take a quick look at the moving averages. Let's take the price off. Fully bearish. We are in a bear market. No change. Short below the intermediate. Intermediate moving flat to down. Short moving flat to slightly up because of that one big day that we had a week ago, but the long term still coming down. Now, this is interesting to me that the long term moving average that I use is down at 50. I'm going to call it 5,300. So to me, that takes 6,000 off the table for those that were hoping for a bounce back up to 6,000. At the rate that this is coming down, let's just do a real quick look. I'm going to go here and call that 5,400. And now we're looking at, let's say 53, $100 per week, which means 5,000 will be taken off the table in just about 3 weeks. Or it will be a terminal point as far as I'm concerned, if we can get any strength to the upside, which I still don't think we can do because, as I have been saying, I think 4,200 is a top. We've got 1, 2, 3, 4, 5, basically 6 candles. And each new one, when we get up to that 4,000 to 4,200, just becomes more overhead resistance, not less. So as you know, I just don't believe that we're going to be able to muster any strength. That last comment is also on the basis that we had 100% move in Ethereum and like a 40% move in a lot of the other cryptos. And Bitcoin is just going flat, and Bitcoin is the king. And so what it does is what everybody else is going to end up doing. And then just one last look at the RSI. It's up at 35. It's got lots of room to the downside. And there's been no real bounce off of the 1 week in which the low week in which we did hit 30 and just briefly broke it. If it was going to move up off of an oversold condition, and some people were saying 30 is oversold, I didn't believe it was. I think we've got to get to 25 or 20. Then this is a very pitiful bounce off of an oversold position. So because of all of those reasons, I still find the cryptos uninteresting from an investment point of view, and just there's just not that much to talk about with it. So I'm going to go here And I'm going to bring my partner back. And there she is. And that's all I've got. But do we have any questions?
You know it. All right.
Good.
So what is the price point to seriously consider the possibility of a gold standard?
Well, if it's a price point for gold, it's already there in terms of it's $7.5 trillion. And that's the most logical thing to use as a starting point. It won't solve the problem at all. So it's just that makes it the most beautiful contestant in a beauty contest with a bunch of ugly people, meaning that the problem is $200 trillion. Something's got to get up to $200 trillion to be 40% of the debt problem. And that means I believe that gold has got to get up to $20,000 to $25,000 per ounce. And it's not going to do it on its own. So it will have to do it through central bank, World Bank, IMF, multinational banks, and finance ministers agreeing to do it, to repeg the gold at some enormous number. Same thing with Bitcoin, but they can't peg Bitcoin. So Bitcoin's got to get there. Bitcoin's got to get to $100,000 in order to be 1/4 of the value of the gold stock and become, take the veil off of Bitcoin, and all of a sudden you've got another potential winner in a beauty contest in terms of the decisions of the powers that be, which way to go. At $400,000, Bitcoin and the gold stock of the world is equal. And now you've got a toss-up between two contestants, with one of them, Bitcoin, having all the momentum. My comments today were that if gold begins to develop momentum and Bitcoin is still going down and a decision needs to be made, it's very probably going to be gold. So that's why this time horizon is so important to me in terms of if the US stock market can break up and start pulling some other countries with it, then we're going to buy ourselves many, many months or maybe a year or two or more, who knows, in which we can settle this problem. It also opens up the possibility, which I think is almost the least likely of the five, of growing out of the problem of debt. The great promise of the tech revolution, the great promise of the internet and what's happened with chips and what's happening with software has always been a surge in productivity. And a surge in productivity can lead to a surge in growth. And it has for a very small number of stocks, such as FANG stocks and certain tech stocks. But it hasn't really had the impact that has changed productivity or has changed total growth levels worldwide. And I can say that because growth worldwide is at 1 to 1.5% and has been for a long time. And growth in the US is only 3%. 3% is great compared to where we had been for the last 10 years, but it's still just 3%. So the great promise of technology could very easily begin to make that happen, but we've got to be in an atmosphere where it can, which means somebody, the US, somebody has got to remain strong long enough for all of that to take hold.
Okay, gotcha. Lots of activity in the live chat. And thank you, Ty. So I'm going to just keep going with gold. So what is the effect of increased money velocity on gold recently? There, just for everybody watching, Some fun econ is just, if you don't mind me explaining really quickly, Ty, the velocity of money, right, is the rate at which money is exchanged from one transaction to another. And like the velocity of money is usually measured as a ratio of GNP, so gross national product, to a country's total supply of money. So interesting question. So yeah, Ty, the effect of increased money velocity on gold.
Well, yeah. They're basically, gold is only growing at 2% per year because of mining. It changes hands from time to time. We've said that Russia, China, and India for the last 7 years have been buying more gold than anyone else in the world, but they're buying it from somebody. And other than that, the big stock of gold doesn't change very much. Central banks have held 20% plus for decades and still do, and the other 75 to 80% is held by individuals that don't really do anything with it. A lot of it's in the form of jewelry. A lot of people just hold it for very long periods of time. Gold bugs won't sell it regardless of where the price goes, from $880 all the way down to $250. A lot of those people held on to it, and then they were finally paid off after 20 years with a run from $250 up to $1,900. Then they continued to hold it and watched it go from $1,900 down to $1,100. And depending on what happens now, they might be rewarded big time again. But they tend to hold on to it. So there's not a lot of velocity of money with gold, and never will be. It's something that is bought and held. I think that's very true in the Bitcoin world too. That's what hodlers are all about. Is they don't care where the price is, they just want the thing, and they'll keep that thing regardless of the movement and the value of those prices. But there aren't that many hodlers in the world, and there are fewer and fewer of them because of all the other cryptocurrencies. But what's interesting is that, other than this new announcement by JP Morgan Chase playing around in the crypto market with this Chase token deal, which to me doesn't matter one way or the other because it's not Bitcoin backed. But most of the people that have gotten into the crypto space are not hodlers. Those were the originals. Some people are persuaded to do that, but most are not. And no governments are hodling it, except, no, none of them are. Or not in large enough amounts to mean anything, which means that there could be tremendous velocity of money as prices of Bitcoin go up and they begin to change hands, and institutions begin buying from individuals, and then bigger institutions buy from those institutions all the way up to the central banks, which is my thesis of how you can get very, very high prices on Bitcoin at some point. But it's so much easier to do it in gold for central banks and countries, because central banks and countries already have it. So they don't need to do anything, weird, simply to peg it at some level. So, and the velocity of money has not been great. We are actually in a deflationary, disinflationary period, and it's lasted for many, many, many years. And that's what the downturn in real estate was in 07, 08, 09. That's what the downturn in the stock market was at the same time, plus back in 00, 01, 02, and 03. So people that are worried about inflation, you're worrying about the wrong thing. That's not what the world is facing. The world is facing default, which is deflationary, not inflationary.
Thanks, Di. All right. Oh, okay. No, I'm not muted. I don't know why I said that. I think.
No, you're fine.
Yahoo. Okay. What do you think? We're almost at an hour. Should we end it here for today?
Yeah, I think we should. Just one quick note. The number of participants in our webinar has gone up by 50% in the last 2 days. It's thank you all very much for wanting to learn. We are working very hard to make this even better than Vegas that I thought was terrific. We've got a lot of new charts. We're going to spend a lot of time on the trading aspect. Okay, let's all assume that this thing is for real, or most of the people attending will have already come to the conclusion this is a real thing, but now what the heck do you do with it? And that's where we're going to spend a lot of time, look at a lot of charts, overlay consensio, overlay option trading, overlay pullbacks to phase lines. Some really interesting stuff has been coming up from outside of our research group, people sending us interesting new hyperwaves. I hadn't realized that the Greek 10-year bonds went through an entire hyperwave back during the crisis until somebody sent it to me a couple of days ago. We're going to look at that because we're looking at the same thing with the Turkish lira in terms of some very interesting things happening there. So we're seeing it in currencies. We're possibly seeing it in precious metals. We're possibly seeing the end of one in the uranium market and in the rare earth markets, including all kinds of indexes from around the world, in the US, a lot of tech stocks, but a lot of pharmaceutical stocks and biotech stocks. So it's going to be a lot of fun, and there's still time to get in on it. Just go to lucidinvestmentstrategies.com and go to the products and go to the webinar, and we'd love to see you there. We're going to have a great time.
Definitely. And also for anyone that attended last minute the workshop in Vegas and didn't get the email, you guys are 1000% invited for free to the webinar this weekend and also get the videos. So let me know on that front. And then also for everybody that's been asking, yes, videos are recorded. So you like the, so you will get to watch it as anyone want for this webinar. Okay, everybody have an awesome Friday. And for those attending tomorrow, can't wait to see all your crazy questions in the live chat. It's broken into 2 days so that we could get a lot of your questions. Hopefully we don't keep answering questions until the next day, the second day of it, but that may happen knowing Tyler. Just kidding. Everybody have a great day. Ty.
Great. Thank you very much. Bye-bye.
Bye.